So we will be going over the accounting equation. So this is the accounting equation. So we have your assets is equal to your owner's equity plus your liability. So what this is trying to do is we want to get the double equation going on, and it's just showing you the relationship that each of these elements have with each other. So your assets have a relationship with your owner's equity and with your liabilities. And it's also trying to answer the dual entry effect when you're doing your bookkeeping, that your debits are equal to your credits, okay? So this whole accounting equation should always balance for accounting to make sense, because every in has an out. So there is always a relationship within a transaction so that you will have an answer for everything, okay? So let's just get into this. Okay, so we will have your assets. So, for example, all the money in your bank, all the assets that you have. So, this could be your land, your property, plant, and your equipment, and your inventory, the stock that you have. So, all of this, okay, that you have, how did you get this? So, that's what we want to find out. How did you get this? So, you either got it from the capital that you invested into your account when you initially started your business, or when you're always investing back into your business through your retained earnings, or when you're giving out shares. So how do you fund your business? How did you get your assets? Or either by the loans that you have taken out, your long-term loans or your short-term loans, for example, when you're buying things on credit, okay? So how do you get the money in your bank, the PPE? How do you utilize that? So all of this should always balance. So that's what we're trying to find out. How do these transactions relate to each other? And in an example, for example, we have a vehicle. You bought a vehicle and you got a loan to buy your vehicle for 25,000. Okay, so how will that relate in the accounting equation? Because in accounting everything has to make sense. So how does this make sense? Where did you get the money? How did you get the money? And how can we see that in the financial statements at the end of the year? So in the accounting equation, you bought a vehicle, which is an asset, so meaning you have more assets, you have more property. Okay, so you have your 25,000, which is an asset, okay, and you got a loan for that. Okay, so we need to find an answer for that, okay, because in your financial statements you have a 25,000 plus, but where did you get the money for that? Okay, so you didn't get it from owner's equity, but you got it from liability, so meaning you have more loans because you got money to buy a vehicle. Okay, so let's say in cases where you didn't get a loan, you just bought you already had cash in your bank and you had enough money for this. Okay, so let me use another color. Okay, so we bought a car, so that's your 25,000 for the car. Okay, so this is going to show in your financial statements under your assets. Okay, you have more vehicles with a value of 25,000. Okay, now when it comes to the bank, okay, so meaning you bought a car, so there's now less money in the bank of 25,000. Okay, now this is going to balance as well. Okay, because now this is also zero. So this is what we mean in the accounting equation. We want to find out the answer to everything. So everything needs to have an end, everything needs to have a reason and a cause for happening. Why did you buy this transaction? Where did the money come from, and where is the money going to? This is the accounting equation. And let's do a couple more examples. Let's say we're having a shoe shop, or let's say we are selling burgers. Okay, so now we need to buy more hamburgers for our business, but we are going to buy these burgers like on credit. Okay, so let's say for $600 we're buying new burger patties, or like meat vosh or something like that. Okay, so we are going to buy this on credit, so that will be your inventory account, which is an asset. Okay, still an asset. Okay, So what did we say the amount was? Let's just say 2,000. Okay, so we have 2,000 more into your inventory, but you didn't get the money off of your owner's equity. Okay, so that would be a zero. However, you are buying on credit, right? So you need to show where are you getting the money to buy these new burgers from? Okay, so you're saying, okay, no, I'm getting it from a loan. So you're going to increase your accounts payable because you are getting it from a supplier of 2,000. So the accounting equation helps us to always give an answer for the transactions that we are presenting within our financial statements. That is the main thing. Everything needs to have an answer. Every debit should have a corresponding credit, or it should just balance to zero. Okay. Another example that we can have is when you pay your water and electricity, for example. Okay, so let's say I pay my water and electricity bill of $500. So I have my it will not affect this equation because it's not here. Okay, but anyways, we said that your debit should always have a corresponding credit. Okay, so your water and electricity is an expense. So remember in the previous video I gave you this formula: Daddy, Kyle. So your assets will always increase on the debit side, your drawings and your expenses, and then we have your income, your liability, and your equity. Okay, so your expenses will increase on the debit side. So this is, let's say, your water and electricity account, and then this will be your bank account. Okay, so your water and electricity account, you're paying off your $500 bill for your water and electricity. Okay, and then the bank, your money is being deducted. Okay, if money goes out, it goes out on the credit side for assets. Okay, remember, bank is an asset, and if money comes in, it comes in through the debit side. So money here is going out 500, and we see here that it's going to balance. So we have a debit and we have a credit. So remember, for these type of transactions, it's not going to have an effect on your like accounting equation. Okay, so your accounting equation is only for your assets, owner's equity, and your liability. So basically your balance sheet items. Okay, what we can also do is, let's say you invested capital into the business. So let's say I invested $500 into the business cash. So this will affect my bank account. So in my bank account I have $5,000 more. Okay, but for what is it? Where am I going to take it to? I need to show that I have capital, because that's the reason why I'm putting in money. $5,000 into our owner's equity, because under your owner's equity, these is where we show the investments that have been made into the business, the money that is for your shareholders or your owners. So this is your owner's equity account, and we put a zero at liability because we didn't borrow any money. So when we have our capital in the financial statements and it shows $5,000, we want to find out and answer, where did we get this $5,000? So it will be very easy for you to trace it back to the bank to say, no, I deposited a $5,000. That's why I have my $5,000 in my capital. So it balances. Okay, it makes sense. There is an answer to this. This is what the accounting equation is for. I hope that this makes sense. Let's just do one more example I will use is, let's say I am paying off my supplier. Okay, I'm paying off this supplier. So when I paid off this supplier, I paid off, let's say, half of the amount of 1,000. Okay, so money will go out from the bank, an asset. Remember, your bank is an asset of 1,000. Okay, why did the 1,000 get deducted from my account? Is so that I can pay my liabilities. Okay, so now I have less liabilities. Okay, I owe less money under my accounts payable. and there is no effect on the owner's equity. So now there's a balancing effect, minus 1,000. Why is there a minus 1,000 in my bank account? Is because I paid my accounts payable, so I owe less money. Okay, so I hope this makes sense, and I really hope you understand. Please comment for more videos and more ideas that you would love me to explain. Don't forget to subscribe, guys. Bye.